This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz, and today is 3/8/21. Well, markets will come and markets go, but the New York Stock Exchange, the Dow Jones Industrial, the NASDAQ, they're forever. And well, maybe not forever, but long enough. Hopefully you can make enough money to retire, because that's the way it's heading. And we'd like to get your views. Tell us your retirement plans that center around the stock market, especially if you have a Robinhood account. We want to hear from you. KL@kerrylutz.com. Right now, John Rubino of dollarcollapse.com is with us now. And John, if you had to write science fiction, financial science fiction, could you ever come up with this plot?
Hey, Kerry. Well, it keeps getting crazier and crazier, doesn't it? But, that's to be expected with all the money they're pumping into the system, because people just have to do something with it when they get it. And normal stuff is pretty much used up right now. There's nothing you can do in the stock market that really qualifies as normal. So people are just, they're throwing money at pretty much anything. So should we talk about the oil markets first, or the NFTs? Okay, because over the weekend, there was an attack on a Saudi oil terminal that sent oil up to $70 a barrel, at least in one measure. And that's a big deal because, one of the big stories of today's world is rising inflation. Lots of things are going up. A growing number of things that percolate into the consumer price index are going up, and oil is the biggest of all. So if it is going to join copper and nickel and zinc and lumber and a bunch of other things that are going up, that's going to lead to a big number for the CPI going forward. So it presents the Fed with a really tough dilemma, because they're promising easy money to the horizon. They're jawboning the federal government to provide more fiscal stimulus. And yet inflation is picking up to levels that would normally lead the Fed to tighten. But they can't tighten because that'll blow up the economy. But if they don't tighten, then inflation, there's nothing stopping inflation from going up even further from here. If we get official inflation in the 3 to 5% range, which you could easily get, with oil having almost doubled in the last year and lumber almost tripled in the last year, and it goes on and on. Lots of things are up at a rate that's dramatically higher than 3 to 5%. So if the CPI starts hitting those numbers, then there's no telling what's going to happen. That's uncharted territory when you've got the government aggressively easing as inflation spikes. That's a new one. So we'll see how it goes. But, I suspect it won't go well.
The dollar has got to go down. Now, right now, the dollar is going up because rates are going up. I didn't look at the 10-year this morning yet, but I assume it's gone up because the dollar is going up, and they think that's bad for gold. The last time we had high rates in the double digits, gold was through the roof.
Yeah, well, if interest rates are going up because inflation is going up, then that's good news for inflation hedges. So, right now it's kind of a race between the 10-year Treasury yield and the perceived year ahead inflation on the CPI. And, it's not clear which one of them is going to go up fastest. But I got to say, if interest rates get ahead of the inflation rate, which is to say if real interest rates go up, that's one of those unacceptable things from the point of view of the government, because that bankrupts everybody. If let's say the 10-year Treasury goes up above 2%, Mortgage rates are pulled along with that. So then mortgage rates they're already above 3% after being in the twos for quite a while on the fixed rate 30-year mortgage. So if they were to go up another percentage point to say 4% from here, that would price huge numbers of people out of the housing market because home prices are way up. The only reason they're affordable for the vast majority of buyers is that you can get a 2.6% 30-year mortgage. Well, you can't get that anymore, which means you can't buy that house anymore that you thought you were going to. And the housing market is a really big part of the economy. So it's booming now, but let it roll over, which it would if we had 4% mortgages again. That right there is enough to bring on a recession. And then, of course, you've got all the other overvalued assets out there that could easily crack in that kind of an environment. So, this year ahead could just be an amazing time because we're already seeing extreme volatility in the financial markets. Stocks were tanking last week until Friday afternoon when the PPT came in and bought immense amounts of stocks and pushed them back up. But that's not something you can continue to do because that's just another form of easing. You're creating more money and pumping it into the financial markets. And then that feeds back into what we were talking about before with inflation and interest rates. So we're rapidly reaching the point where there's no solution to this stuff because you have multiple problems with mutually exclusive fixes. In other words, you fix one thing, you make the other thing worse, and vice versa. And when we hit that point, that's when everything blows up because we'll all lose faith in the government to manage stuff once we figure out that they can only make something else worse by fixing this thing that they're looking at right now. Then it's game over. And you know what, Kerry, about damn time. This has been going on for way longer than it should have been. So if this is the year when it ends, or at least starts to end, then good. Let's get this over with.
Yeah, we've been putting it off for far too long. I got a question for you, though, John, that I've thought about. I don't know the answer. Maybe you do. What happens when the PPT comes in one day, when markets are down, and they really buy everything up, and markets keep going down, and they have no effect on the market, where the selling, the strength of selling, the tide has just gone too far out, and they can't do anything about it? Them coming in and buying is just going to make it worse, isn't it?
Well, that's kind of what's happening already with the Fed, where they're aggressively easing, or at least they're talking about aggressively easing, but it wasn't working. The Fed came out with a bunch of really dovish statements and stocks went down. So the PPT had to come back in and buy equities directly. But yeah, you're right. One of these days that won't work either because people will perceive that it's causing trouble elsewhere when they do that. You push stocks up. Okay, you can totally do that if you have an unlimited printing press. But then if that makes inflation go up, which in turn makes interest rates go up, then you've got to come in and smack long bonds down with a bunch of newly created currency while you're trying to elevate stocks with a bunch of newly created currency. And that just makes inflation go up even more. We're coming to that point when whatever we do, it actually makes things worse and people respond accordingly. In other words, we'll do the opposite of what they want us to do at some point, and then game over.
Hey, so YCC is the big thing on zero hedge now, which is yield curve control, which fits right into what you were just talking about. We can't allow long yields to go up, so we'll just go buy all the stuff and buy the rate down. And that's not a formula for long-term success either.
Well, that'll work beautifully as long as inflation stays well behaved, which it's not already. So if they come in and say, okay, from now on, we're going to peg the 10-year treasury at 0.5%, and we will buy as many bonds as anybody wants to sell us at that yield, at that price. Japan did that for a long time. They pegged their 10-year bond at 0 and basically got away with it. But they got away with it because they're in a deflationary system that just won't generate inflation anymore. They've got too much debt. It seems that we're not in that place now because we're seeing rising inflation. So for the government to try that would basically be dumping a ton of new money into the system, which will flow into copper and lumber and zinc and lots of other things that and stocks and bonds and oil and Bitcoin. So you'll see a lot of things spiking, which in the aggregate amount to rising inflation. And then that basically negates what the Fed is trying to do. It becomes counterproductive because they're making things worse by trying to protect the yield curve. You could make the case that we're kind of there already because we're already ignoring what the Fed says. And it's a small step from there to ignoring what they're actually doing when they change policy. So, yay, let's get this over with.
So Bitcoin is back up to nearly 51,000, and its little parabolic dive. It's still got a ways to go on the upside for sure, but at some point, what happens with all parabolic rises, we'll see there. Hey, what about what's going on with these NFTs? First, tell us, what is an NFT?
Okay, now using the blockchain, this is just a fascinating thing that actually it turns out it's been around for like a year. I've never heard of it till just lately, but using a blockchain, you create a digital asset, which is a piece of art or some other thing, and you transfer it via the blockchain so that it registers that transfer, and the recipient has then an immutable ownership of that asset. That's the only piece of art that counts as this, they call it a non-fungible token, an NFT. And so once you own it, there can never be another one. You own the only one of that thing. And that, in the same way that Bitcoin has a limited supply, these things have a limited supply also, and in theory are valuable because of that. So all kinds of things are being converted into NFTs, like the very first tweet ever, Jack Dorsey, the CEO of Twitter, is auctioning that off, and it's already up to $2 million bidding. So, and there's a LeBron James dunk video that is now worth, I think $2,000 or something like that. I might be wrong about that, but it's a big number.
Sold for 200,000.
200,000. Okay, yeah, because I know it was a surprising number, but so now in theory you can create basically anything, digitize it, and sell it as an NFT. But the really creepy / exciting thing that just happened is somebody bought a Banksey painting. Banksey is a modern artist who's still around. Street artist yeah, and his works are very valuable. They bought it for like 70 grand. Oh wait, I'm sorry, 95 grand. And they burned it and recorded the burning of it, turned that into an NFT, and just sold it for $400,000. So they quadrupled their money by destroying a piece of art and turning the destruction of it into a different piece of art that was sold on a blockchain. Imagine the business model that flows from that.
Hey, imagine somebody buys a Trump Tower in New York and demolishes it.
Yeah, and it becomes worth...
Sell for?
Yeah, and the NFT is then worth more than Trump Tower was before it was demolished. Yeah, so, that... And okay.
I don't understand it. I don't get it. Sorry.
I get that it's a new technological way of creating scarcity, but it really seems like a sign of a bubble peak, right? There's so damn much money out there just flowing around and nobody knows what to do with it. So they're paying huge amounts of money for stuff like this, which in the next crash, we will have a deflationary crash when all these air pockets underneath tech stocks and trophy real estate, and yada, 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 are all exposed and these things fall, okay? You got to figure that NFTs are going to be caught up in this and just plunge in value. So I think I would be waiting for a market in shorting these things to come along before I wanted to do anything with them. But I get, and then a lot of people are going to complain now in the comments that you and I do not understand how the blockchain works. But I just can't get my head around the idea that a digital asset is valuable in relation to a real asset. In other words, worth more than the real version of it. That seems like a market waiting for something to blow it up. In other words, we'll have a solar flare or an EMP attack or a major hacking event or something like that, which will take down the internet in a very serious way and take down the Bitcoin network in a very serious way. And then we'll find out how much these things are really worth when we have to go an extended amount of time, then you can't get to them. So we'll see. All of this stuff all these tests are out there waiting to happen for cryptos. They have to be tested in certain ways and survive. Like the governments have to strike back against them, and then they have to survive that. And there has to be a major cyber war event or major hacking event, and there has to be a major sunspot kind of thing, solar flare. All of these things have to happen before we can say with any kind of certainty that cryptos have enduring value. And I suspect that they'll pass most of those tests, but there's no guarantee. We have to go through all that and find out. Oh, and there's just an article I found that was actually from a year ago, but I just posted it in the Dollar Collapse links list today because it's so topical. But it's that quantum computers will destroy Bitcoin when they come along. And by 2022, that was the headline. The gist of it is that the next generation of computers, quantum computers, are going to be so powerful they can break any encryption. So what does an encrypted digital asset mean? What is it worth when encryption is no longer what we think of it as, unbreakable, right? So we'll see about that too. All of this stuff is coming. It's going to be a fascinating world, but from a safe distance. I don't think you want to be just embedded in this stuff when it all starts to happen.
I don't know that there'll be any escape. Got to wonder, what was the value of Bitcoin during the recent Texas grid outage, where you didn't even have cell phone service. You had none of the modern conveniences of life. Literally, they were all yanked out from underneath your posterior, and then you're kind of left. Luckily, it didn't last for that long, but the ramifications are still being felt.
Well, crypto sailed right through that. I think Bitcoin went up during the couple of weeks of the Texas crisis.
It went up, not in Texas.
Yeah, well,
couldn't get at it.
Yeah. I mean, for that period of time, people who had cryptos could not do much with them. I mean, I know crypto fans say, well, we can still just sign over the key to our crypto wallet, so you can still transfer ownership and everything at some value. And that's true, but a lot less seamless and frictionless than trading it online. So I don't know. I mean, all this stuff just has to happen. We have immense uncertainty out there because cryptos have never been tested. This bubble is just the biggest bubble in the history of the human race, and electric grids don't seem to work the way they used to. Cyber attacks all of this stuff is just out there waiting to happen. So I tell you what, I would like to have lots of silver coins on my person when that happens.
Here's a question / comment from one of our FSN community members out there. Alex says, Kerry, we know the rhetoric around confiscation of gold. Here's a thought. What's easier to confiscate, both logistically and in terms of policy, gold or cryptocurrency? It's easy to demonize crypto, and most of it is sitting on exchanges. Like you said, possession with intent to distribute crypto. Regards, Alex.
Well, yeah. See, gold is not the threat right now to fiat currencies, but Bitcoin and the other cryptos are becoming a threat. And governments will respond in some way. And that they've already confiscated gold back in the 1930s when it was money, when it was a threat to the expansion of the federal government's power. So there's no doubt that the empire will strike back in some way against cryptos. And that's a test that the cryptos have to pass. They've got to survive that. Let's say, the US government just decides to make crypto ownership illegal. That's an extreme example. There are a lot of regulatory things they could do before that, but let's say they did. What would happen? I mean, if it gets to that point, if the dollar is sincerely threatened by Bitcoin, they will make it illegal. And then what? Does all the money that's in cryptos now just flow immediately, in a heartbeat to some country that's not making it illegal? And does that country then become the richest country in the world? That's what somebody told me. I asked a Bitcoin expert this question, and they said, yeah, it'll all just go to Panama, and Panama will be the richest country in the world. Okay, maybe.
I like,
I don't know.
And but Panama, between the U.S. and China, we own Panama. It's a complicated issue, and I'm not saying it's going to happen, but I'm saying that in any investment that you make, anything you buy, you always have to judge risk, no matter how remote it might seem. Because if you don't, then when it happens, you're caught totally by surprise. So we don't know the risks, I think, is what you're saying. And that's really the important thing. Just a crash, once like the stock market starts going down, there's a pile-on, knock-on effect of people rushing for the exits. And these are the things that have happened with Bitcoin crashes, and liquidity of Bitcoin is up in the air. There's a lot of issues. We're going to have to update our white paper. So if you want to get our updated white paper, we'll have it out in a couple of weeks. Just send us an email to kl@kerrylutz.com. Put in the subject line white paper, because the last time we did it, John, I think Bitcoin was about $5,000. It's only gone up tenfold then. And we weren't particularly bearish on Bitcoin at that particular moment. Just the conclusion was it's an emerging asset class and we don't know. And I think we still don't know, although many of you out there would like to think you do. So when we think about that, think about the first guy who mined gold back in prehistoric times. It really wasn't worth anything. And over the 5,000 years, it became worth something. Bitcoin's adoption a lot faster. Is there room? Is Ethereum going to replace Bitcoin? I don't believe that Bitcoin is the final iteration of cryptocurrencies. That's what I'm saying. But that's for the market to decide, not for us. Not bashing it. I'm just saying, remember the R word. It's a 4-letter word that can wreak havoc with your net worth if you don't properly account for it. And I'm all for having a portion of your assets in cryptos, 5-10%, somewhere around there. Once you get more than that, then if it really gets slammed, you could be disproportionately affected. But if it keeps going and it goes up to $1 million a Bitcoin, you still have enough of it there to have a very comfortable life.
Yeah. And, cryptos trade like tech stocks. So we shouldn't think of them right now as money, because money tends to be, one of the characteristics of money is that its purchasing power is fairly stable, whereas tech stocks are really volatile. And I think in the coming turmoil, let's sketch out a really simple scenario that's very possible, is that interest rates just spike, which spooks the rest of the financial markets and causes a bear market in equities, a bear market in real estate, and that by definition, spiking interest rates is a bear market in bonds, and that pulls down pretty much everything. Because if your stocks are tanking, your bonds are tanking, and you've got some Bitcoin, you have to sell it, which is basically the dynamic in the stock market. You end up selling the stuff that hasn't gone down yet in order to raise cash to offset the stuff that has gone down. And so I think that cryptos are vulnerable to that in the short run for sure, and that might create a buying opportunity where everything is way down, but now it's way cheap, and so we can convert our gold mining stocks or whatever into cryptos at that point, and so that's a play that you don't even have to be a huge crypto fan. You don't even have to understand them. If you just assume they're an asset class that is now out there and now exists and now tends to trade like stocks, like growth stocks.
like Tesla.
Yeah. So you buy it when it's cheap, sell it when it's expensive. And right now, the market is such that most risk-on assets are very expensive. So this is a time for shorting or just staying on the sidelines. Later on, there will be a time to jump in with both feet and buy these things.
Hey, so we would be remiss if we didn't mention two things. Number one, the stimulus porculus bill, which is going to send $1,400 to Robinhood traders around the globe, and whatever other platform they might have fled to after Robinhood's dastardly trading restrictions. And the other thing, of course, is COVID rates they're just plunging now. And if they keep going this rate, which evidently the health experts think they might, we could see the end of this thing in as early as April, mid to late April, or by June, by all accounts. These are by the modelers who didn't get anything right yet, but they're saying that it's going to be kind of non-event. Now they keep saying, oh, there's this strain, there's that strain, and it's contagious and all that. I mean, what's your take on where COVID's heading, John?
Well, I think everybody's just given up now, caring about it. Like Texas just went back to, they adopted the Florida model where there's really no lockdown anymore.
No masks. We don't need thinking masks, right?
There was a great video of people burning their masks in Boise, Idaho. They were standing around this oil drum that was on fire, and they were tossing their masks in and handing little kids masks to throw in. So I think that's the dominant attitude now. People are just sick of this lockdown, and they just want to go forward, which means the economy will snap back. And we can't forget. Yeah.
Bartenders and waitresses, that was the biggest job category expansion in the last jobs report last week.
So we're out there eating and drinking again, finally. I got to say, I miss doing that. So it's good to see it coming back.
I never stopped. That's why I got COVID. So
but Kerry, here's what's happening. We're throwing this massive stimulus program plus easy money from the Fed in the way of QE at this economy as it comes back. And the Biden administration and the Democrats in the legislature are working on a big infrastructure plan that is going to follow today's stimulus plan. So we're in a really unique situation with interest rates rising, inflation rising, and the government tossing record stimulus into the market while this is all happening. So, we could see a very unstable year ahead because of that, just because all this money that's coming in,
It's like throwing C4 explosives on the fire. I'm looking at COVID cases here, John, and the number of cases, 14-day change, minus 12%. That's substantial, because on March 7th, they had 40,000 cases. Deaths on March 7th, 682, down 10%. They always lag cases. And hospitalizations nationwide down to 40,212. That's as of yesterday. That's down 29%. So obviously the deaths are going to plunge very rapidly. It looks like there's a good possibility. There are still some hot spots, no question, but the therapeutics for treating it, I'm proof of that, have come a long, long way. But John, stimulus. Okay, so if you're a Robinhooder, picture yourself like 80 years younger than you are, with no fear of declining market prices, and just like real estate, stock prices always go up, and you got $1,400 added to your Robinhood account. Like they would have just direct deposited to Robinhood. I guess you could probably do it. They probably have a bank, and you probably just give them the number, and they'll just put it right in your stimulus check, right in your Robinhood account. And then you got $1,400. And man, can you imagine the short squeezes that are going to take place? I mean, is anybody still short the market?
Yeah, that really is putting the money in the hands of people who are going to immediately buy stocks with it. So, I have a son who's doing this. And so I hear from him the attitudes that are out there. And the GameStop thing, it caused them to be more cautious because they found out there is a limit to how far they can push the big Wall Street banks and the regulators and everybody, and before they get slapped down. But there are huge sections of the economy that nobody's really paying attention to, like biotech penny stocks, where these guys can go in and quadruple one of those stocks and then sell out. And the guys who bought it to begin with during the ramp up make a ton of money, and they can do that over and over again with an unlimited number of stocks. So they're still out there having fun, and this money is just going to flow right into that stuff. So, and I have no idea what that means. Whether that is the final gasp of this bubble, or
well, if the Titanic's going down, I always said I want to be there with the band playing till the water gets up to their necks. I don't want to be jumping off the boat hoping that I'm going to get saved. I want to dance till the very end. Now, I think the next trend that's coming, and I think I've nailed this one probably ahead of most people, is penny stock energy companies, because with oil prices jacking up $65 even before the attack on the rig in Saudi Arabia. We're working with a company now, sponsor TCFF. The company is like quintupled in a matter of quintupled or quadrupled in the matter of 2 weeks. I think the energy stocks are going to get rediscovered with a passion. You've already seen Exxon and the majors go way up from their lows a couple of months ago, and it's kind of like when you see gold go up, first the majors go and then the juniors go. So I'm thinking junior resource stocks, not just oil, but this is a good one. Actually, it's nat gas, clean energy. I think you're going to see a run up in these junior energy stocks as well.
Well, uranium is taking off. All the uranium mining stocks are way up too. But this is how bubbles work. Is there's so much hot money out there that they focus on one sector and then they move on to another sector, and so the hot money just kind of flows around, bidding things up, and so you basically want to be early in one of those sectors before all the hot money pours into it, and that's a lifetime worth of investing right there. If you can just be there when everything goes up 10 times in the little sector that you picked. But of course, it's going to end catastrophically at some point too. So there's a real question about whether it's wise to be doing stuff like that in this market. But until it ends, like you said, until the music stops playing, there is a lot of money to be made. So it's tempting and scary at the same time.
Yeah, the music will stop playing because the ship goes down, and it's really hard to play musical instruments when the water's up to your neck. But the Robinhood phenomena is going to intensify, and it really will be the tail wagging the dog. And whomever can get their stocks and their investment propositions in front of Robinhood, whether they know they're getting manipulated or not, is going to do quite well. The rest, I still think are going to do well, but they're not going to go as parabolic as the Robinhood picks. We've got to leave it at that. But it's fascinating to watch all of this unfold at the same time. We do this for a living, John, you and I. We watch these markets, we watch societal trends, we watch geopolitical turmoil and political turmoil in the US and all over the world. We can't keep track of it. And, it's like, how can anybody keep track of it? We'd like to know your thoughts. If you've got any questions for John, just shoot us an email, kl@kerrylutz.com. John's website, of course, dollarcollapse.com, which you must subscribe to it now. He's pumping out a steady stream of articles, really important. And of course, us, financialsurvivalnetwork.com. Got a newsletter going out tomorrow, so make sure you sign up, and we will get to work on the updated Bitcoin white paper very shortly. Thanks all. John, next week.
Bye, Kerry.
Now more than ever, the Financial Survival Network.